Okay, folks, this is Brandon from Galaxydoc Market. I'm going to bring up for you a video earnings preview of the Home Depot in line with my continued consumer demand destruction thesis, just like Disney, Affirm, Roblox, and all of those other companies that are coming along. And the earnings are going to be reported tomorrow morning, May 14, 2024, before the market opens. And I hope this is helpful. And so we're going to be talking about Home Depot and why Home Depot? Why this very boring stock? Here's the disclaimer. Read it, pause it, and if you agree, please move forward. In short, it's the consumer demand destruction thesis. Okay, the consumers are tapped out, and the rising inflation, everything costs a lot. A lot of people are losing their jobs despite it not being reflected in the government data. Surprise, 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 guys. And we have CPI looming on Wednesday, so I thought we'd get a jump on this, and then hopefully this analysis will help you. And why, for me at this point, Home Depot would be another candidate to continue and carry that torch of consumer demand destruction. So, as I said, Home Depot's reporting earnings on pre-market May 14th, which is tomorrow, Tuesday, 2024. And these are some of the previews that I want to talk about. Now, one of the things that we need to understand is that Home Depot has been very good about reporting good earnings. They're going to beat their earnings, and after all, their earnings are what basically has been kept up by the consumers' demand for home improvement. Right? It's spring, people are doing gardening, and there's always something that needs fixing at their homes. But my thesis is if everything costs more, if your wages aren't growing or you've lost your job, if food inflation and gas inflation is hitting your balance sheet, you're going to be cutting back on home repairs. Okay, because maybe a leaky roof might be an issue, or if you're in Arizona like me, air conditioning going out is a big problem, but if you can't afford it, you can't afford it. And if consumers are tapped out on their credit, well, you can't really afford it. And where are the first places you're going to be cutting back on? And that would be on home repairs. And so that is my thesis. And the thing is that as you'll see, I'm going to go over the Q1 all the way down to from this Q1 to all the way down to the Q1 of last year. Of course, we're going to be talking about the Q2 that's coming up, obviously. And one of the things is that you're going to notice that last Q right here, they basically missed earnings on the revenue, okay? And then they had some adverse reactions, but they tend to kind of meet or just barely beat the expectations of the revenues. It's when this becomes a problem, when this is missed, the stock tends to have a little bit of an issue. And what better time than looking at a May 16th when they last missed? Will they repeat that issue again? So let's keep this in mind, and let's look at some review of the earnings. This is Q1 2024 in February, just recently. They basically beat all numbers, and so this is, they report pre-market. So basically, they opened, you know, they dropped, and then they popped, and then they went higher. So they tend to drop, and then they pop, and then move higher. And that was because the earnings that they expected while they beat it wasn't that spectacular. They're talking about consumers slowing down on their purchases, right? So they dropped, and it just got rescued. And at this point, that's pretty much what happened, and then they gapped higher a few days later. Okay, so that's the way the market has been, all that buybacks and everything else. So this is a stock that you need to watch because if the consumer demand destruction is there, and you'll see based on my technical analysis that there's a lot of room to fall if they miss. Now, the other thing that we want to talk about, obviously here, is the earnings on Q4, November 14th, 2023. Okay, they beat the top and the bottom line. And again, this time around, from the close, they gapped higher and then moved higher from about, 296 all the way to 306. That's probably like a 10-point move. Okay, so again, did it pay to front run the earnings? And yeah, in this case you did, but you had to buy calls, right? So, and that would have paid. Okay. And the movement is worthwhile because for some reason, Home Depot's IVs are not as crazy as everybody else's. And this earnings round, we'll go over the options chain. They're basically priced to be worthwhile if you wanted to partake in this. Okay, now here is the earnings for the Q3 earnings, 8/15/2003. They beat earnings on this one, and here they basically opened and then closed in a very narrow range, but it was very wild. They went from 322 all the way to 331, up and down, right? Even if you were short, 325 into like a 322, that's a 3 point move. But then afterwards, if you basically saw the stall, it sold off. Again, this is a stock that, you don't really need to be front running if you don't have to, unless they beat or miss. Now, we're going to do that comparison on May 16th. This was last Q3 in 2023. They beat EPS, but they missed revenues, and it just went nuts after they reported earnings, right? And then they popped after that. It kind of got rescued, and along with the rest of the market was being pumped. So it basically went from 270 all the way up to the top of 290. That's like plus 20 points. And then from there, from went to 290 to 277. So it gave you a ability, whether you're a bull or a bear. And this is the reason why I'm bringing up Home Depot, because it's a stock that gives for the bulls and the bears. If you're patient and waiting, even if you front run things, it can pay. Okay. Now the question is that are they going to miss this time because of the consumer demand destruction? Well, that answer could be seen right here. And basically the IV, I don't know if you could see this. IV percentage is about 50%, but if you go out one more week, it's 35%. Expected move is about 17.05 versus 14.43. Still worthwhile if you're one of those people that like to live life on the edge. This is one of those things that, in my opinion, doesn't cost that much. And if you have a conviction one way or the other, based on my earnings analysis, there's a high probability that they may come in line or barely beat, but that may not be enough based on the expectations. And it's going to depend really on what they're saying about the consumer trends, right? If my thesis is correct and it is now spilling over into the retail side, especially on home improvement, which has been a stalwart of these markets recently, that it's been bomb-proof. They've been doing well. We're at the near all-time highs. That's something that you may want to pay attention to. However, look at the volume, right? I mean, okay, so we have 17. 100 all the way down to 1350. There's a 2000 right near the 330 strike, and I think that's a good strike for you to look at. So if you look at here, let's look at the volume, comparatively speaking, on the call side. So there is a discrepancy. There is basically a significant volume activity right now, whether that's hedging or not. But if there is consumer demand destruction, I'm going to show you why it may be a good idea to maybe buy one more time or wait until the stock has reported their earnings. But there is a discrepancy in volume, significant discrepancy in volume. But if you look at the trade analysis too, call to puts right now, total being bought, and they're about even with a slight edge onto the puts, right? And then here's the thing that you really want to watch is that, is it traded at bid or higher or at ask or above? Okay, so, there is a slight edge on the puts that are being bought at the ask. That means that there are people out there that are basically aggressively buying at the ask. And so therefore, there is a tendency, these are not small numbers that are being traded, that there may be a tendency for this to get a little bit more impulsive than we think or give it credit for. All right, so let's go over the daily Home Depot. Okay, and you guys saw this if you watched my long weekend video. But the thing is that we're running into this auto pivot that I like to use. I mean, this is one of the greatest features of stock charts. I don't get paid by them, but guys, you really need to look at this. Okay, now the RSI is breaking below my trend line. It's failing here. This is as of today, about 30 minutes ago as I made this video. It's finding support at the ADMA. And then, of course, above is kind of the zone of overhead resistance. And basically, it's already been mapped out. I'm not going to go into the details how I arrive at that, but that's kind of where it should go if it's going to pop. However, if it's going to drop, we have a zone right down here where I think it's going to be a fantastic area, somewhere between 328 to about 322 as a first target. Okay. And then obviously, if things are really bad, I mean, coming into this support area, 313, would not be out of the question. And the options are priced appropriately. Now, when we look at the MACD, I mean, it's been, we had a bullish crossover, but now the histogram is coming down. It's kind of trying to make that death hook a little bit, right? You see that? And then, of course, the CCI is basically coming back in, losing some momentum. And then, of course, stochastic also looks like it's making a little bit of a death hook formation. What's important to note is that the PPO ADX, as of today, is trying to put in a potential bearish sign. Okay, PPO and the MACD are very similar. I like PPO because they're smoother. It's trying to make that death hook. So if it starts to make these kind of a formation after earnings, then that means that there's going to be a significant move downward. And this is bearish, folks. And so that's something that I'm going on. And, I think that there is some movement downside and that the consumer demand destruction is real. Okay, so accumulation distribution has been on a downward trend. It did pop above and now it's just kind of stalling back out. When you have the ATR basically breaking near this high level, I think this might suggest possibly that it can pop first after earnings, maybe, or that we come straight down. So I don't think it really matters too much whether, you try to front run this or not. That's your prerogative. But I do believe that there is a good chance that this is going to potentially sell off, after it basically pops a little bit after earnings, or it may just sell off altogether. Here's the weekly. And of course, weekly is pretty bearish. I mean, we got the RSI that's trending down. It basically moved higher and then it's already been selling off. It's finding support right at this level at the green line, which is ADMA. And that's usually a support area. It has to get below here, right, at these 329 level, but it could very well fall at the very least to 329. But on the weekly, this is kind of the market structure zone that I think this may get to in a week or two. That's why I think I'm advocating when I showed you the options chain to look for the May 24th target if you're so inclined. This is definitely got a pretty good ratio. Here's the 20 SMA where it could stop. Now, if the earnings are good and if they say there is no demand destruction that they're noticing, which would be a surprise to me, yeah, we can see this thing right at 390. But regardless, this thing can move either direction. Now, here's the situation. The main thing is that predominantly it's been a sell volume. I think they've been selling ahead of it. Insiders are selling, as you know. And so basically all the buy volumes has been pretty lackluster on the weekly, right? And so what are we looking at here? On the weekly, we still have, flattening out of the MACD, histogram. We have a situation where the CCI has bottomed, but it may be looking to maybe start coming back down on the weekly. So this is I think even if you front ran this and then this popped a little bit, I think you'll be okay. Here's the thing, though. We've already had a bearish formation on the PPO ADX, which really signaled the downturn of Home Depot. But now, is it going to continue to come down and continue to form this, or is this going to turn somewhere after earnings? That remains to be seen, but weeklies don't turn that fast. Okay, the daily is pretty bearish at this point. Accumulation distribution on the weekly is showing same thing, negative divergence. People are selling, okay? And then ATR is kind of in the middle, so it could go both ways. I mean, it's not at the pegged at the top or the bottom region. So that's kind of what we have. I think the stance on the shorter term is more bearish, and the weekly, it's going to take some time. I think it's going to continue to be bearish, okay? So, in synopsis, if current consumer demand destruction thesis is correct, Home Depot should continue to show this trend, right? And whether it pops and drops, and we've seen a lot of pops and drops. Look at Apple after earnings; they get reported um, better than feared earnings. And but guys, we are near the bottom end of this sell-off, and we do have summer months that are coming up, which tends to be bullish. Okay, CPI is going to determine the one final movement, and if you haven't seen that, watch my video from this weekend. It has a lot of details on that. Home Depot has beat earnings in each of its last 5 quarters, basically, and they moved about 15 to 25 points, right, up and down. So, I mean, I think if you're the prudent type, what I would do is basically wait and wait for a pop and a drop. Okay. If the earnings is really good, then wait for a drop, then a pop. I mean, it's going to give you both degree of things. If pressed, I mean, I'm bearish on this. Okay. So the daily PPOADX signal indicates more downside though. Okay. So home improvement should start being affected by this inflation and consumer credit implosion that's occurring. So if for me, this is not financial advice, but the way we're taking it is May 24th strike expiration, 3:30 strike puts. We're going to have a small pilot position. If it pops after earnings, we're going to add a little more to it, maybe go closer to the strike. If we're completely wrong, however, we know for some reason they report great stellar earnings and everything's peachy and oh no consumer destruction. Yeah, we'll go long because there's gonna be a good range to the upside as well, but predominantly bearish. It may be prudent to wait until after earnings due to propensity for this to jump on earnings and then sell off, right? But there is a high probability of earnings miss on deck, and options chain analysis shows that there is a predilection towards put buying at the ask, and there's a lot more than 2 to 1 volume that shows that. Anyways, like us, please like us, okay? And I'm not, and share and just subscribe, and I thank you. Let's get some alpha. If you want to find out more about this group or this channel, it's here for your benefit. I'm not really asking for anything. Okay, I'm trying to build a community here. Schedule a consultation. Here's the address that you want to be looking at. Thank you. Okay, and good luck.